The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 30th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out this circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let your fingers do the walking. Send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get started on this terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 353 points, trading out at 24,293. You don't need me to tell you what the markets are doing, what the buyers and the sellers are doing. It's pretty darn clear. You got the S&P 500 up 27 points, the NASDAQ up 54 points, the Russell up 7, the semis up 12, about 1%. You've got the spot volatility index right now at 5.3%. It was up 10% just about 10-15 minutes ago. We'll take a look at that. Gold is back $12. She's trading at $12.73. Silver's down 19 cents, trading at $16.36. Light sweet crude off 29 pennies. All the sectors inside of the S&P 500 are mean and green. Leading the charge to the upside, you've got Churchill Downs. That only makes sense as the horses are running the show out here. $15 to the upside, 6.7%. Amazon up $13, a little over 1%. Priceline up $10. Humana up 3.7%. Goldman Sachs up 3.5%. Alliance Data Systems up 3 3/10%. Of course, Sherwin-Williams, he has got to get in on the game. Painting the town green up 1 8/10%. That was be $7 to the upside. Bitcoin Investment Trust only off $23, 1 5, about 1.5%. Stamps.com down 8%. Axalta Coating down 18% or $6. Overstock.com clearly overstocked, down 13%. Smart Global down 14%. That's about $5. Of course, I want to look at what you want to look at. Let's go to our first question. Let me see. John in Sarasota, he writes in. Let me see what it says here. Hi, Steve. He didn't say Steve, though. What do you see for the next 30 days? FXC and XLF. XLF, what we see coming for, let's do this. Let's answer it with very, very specific reasons why. So we'll take a look at the XLF. We'll look at the daily. We'll look at the weekly. We'll take a look at the monthly. The daily, John, has a confirmed A to B equals CD to the upside. I'm just going to give you the short one, the conservative one, and then we'll let the monthly give us the longer term one. Specifically with regard to trying to time this by day, I'm just simply not that good to tell you exactly where the price is going to be come December 30th, other than to say it's going to be higher. I will share that with you. If we take a look at where the XLF is headed to, the confirmed A to B equals CD, the 1-to-1 takes you to $29 even Steven. Now, you would never, ever think, and you'd never, ever sell $29 or even believe that that is your price target, because this thing only had a 34% retracement. but just shy of 0.382 retracement. I just simply want you to take a rubber band and I want you to wrap it around that index finger as hard as you possibly can and back it off, in essence, 34%. Let that rubber band go. Measure that energy to wrapping it exactly the same and backing it off 61% and letting that rubber band go. Which one has more energy? Exactly. The one that only backed off 34% has more energy. That means it's going to do more than a 1-to-1 A to B equals CD to the upside. So where is it that the XLF is headed to? The XLF is headed to 29.85, maybe 30.94 out there. Who does that bode well for? Well, all of the stocks inside of the XLF. That also means you can be long the S&P 500 because the weighting structure of the XLF inside the S&P 500 is 14%. Who else does it bode well for? The Russell 2000. The number one weighted sector inside the Russell 2000 are the financials. The XLF is headed higher, so too are all of the financials. You want to be long the S&P 500. You want to be long the Russell 2000. Now, that is the short-term picture with regard to where the XLF is headed to. The longer-term picture is that you've got a monthly A to B equals CD. That price projection is 3106. The monthly A to B equals CD pattern also did only a 35% retracement. So this is mucho grande strong out here. Price is going to go back and test the all-time highs, the May 2007 highs out here. But price is not going to stop there, John. The XLF is headed to 35.42. That's the 1-to-1.272. I would say 40.97 is the likely area. Where you would then perhaps, let's go see if we do, we'd get a butterfly sell pattern. Let's go see where that actually lines up out here. And the 38.10 would be one price projection for a butterfly sell, and 47.16 is the number. I think it's 47.16. That means you're going to see over time, not 30 days, a doubling or very close to a doubling, another $20. That's probably 80% growth inside the XLF. I can't give you the time frame, but simply put, it is headed higher. You had another question here about FXC. So let's go see what FXC is. I think that's a currency. Yeah, that's a Canadian dollar. And that becomes a whole lot more difficult to give you a price projection on that, other than to say, let me do this here. Let me switch over. And I'm going to take, because my currencies are about 10-minute delay on it, I'm just going to take a look at the futures contract for you. Here we have no delay. This is a continuous contract. And what it looks like is going on to me as we take a look at the futures contract for the Canadian dollar, the loony toonie out here, you've got a falling price oscillator below zero. Whenever you see price below Stevie's red line, right now that's priced at 0.7796. And then you take a look at the price oscillator, it's below zero. You have a falling price oscillator below zero. All this has to do, all this is going to do here shortly, is go test the swing point from October 27th. And if it takes out that low, what that's telling you is you've got a huge A to B equals CD to the downside. And that is what the loony is doing. John, thanks for writing. And we will go to our next writer, if one writes in, or we'll go to the mo. We're going to go take a look at that spot volatility index. And what does it mean to be moving higher today with the S&P 500? How often does that happen? We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So as we take a look at this chart here that we've got, right now you've got a one-day rate of change in the spot volatility index of only 2.9%. As I say, about 30 minutes ago, it was up over 10%. And so that begged the question, at least it begged the question from me, inquiring minds out here, what does that mean? Because typically when we have a spot volatility index one-day rate of change greater than 10%, that identifies a bottom for us. Well, the market's moving higher out here, so what does it mean? And I posed the question, something like, how often does that occur? Well, first of all, out of the last 7,036 days to be exact out here, that'll take us back into 1990, I believe, we have seen that occur 11% of the time. Just simply the volatility index is to the upside and the S&P 500 is the upside. Those are only two things you want to be paying attention to. When you're taking a look at the VIX index, you're only interested in the S&P 500. It does nothing for measuring the Dow or anything else. It's only the S&P 500. So 11% of the time we have that anomaly. We have that anomaly today. But how often do you see a spot volatility index, and I just used 9.5%, versus 10, do we see it up 9.5% and the S&P 500 up like it is today? Well, that is called 0.2%. Yeah, that would be 12 occasions, and that was including even today, so it's going to be less than that if we don't see that out here. So it doesn't happen often. But what does it mean when it does happen? And what it means when it does happen, let's go see. The only way to really do this is to go take a look at the charts. The last time we had that occurrence was on the trading session of February 15th. This was a happy Valentine's Day gift to the stock investors out here. Because as we take a look at it, you had the spot volatility index up that day. One day rate of change, the percentages are that very top line out here, was 11.4%. That certainly didn't mark a top. It could almost say that was an initiation move. And the time before that, we have to go back to 1997. So excuse me while I just kind of squeeze in here. Yeah, that's how long, 0.2%. So we hadn't seen that occur since 1997. So it went from 97 to 2017. That was 20 years from the last time that we saw that anomaly where you saw the spot volatility index up big, meaning one-day rate of change greater than 9.5% versus what the S&P 500 was doing. Well, back in 1997, the very specific date for you is April the 5th, 5/5/97. One-day rate of change in the spot volatility index up $14.96. Well, if you take a look at that's that green arrow on my chart, that certainly did not indicate some type of top, or this you already had a move that was headed higher out there. So if we go back to the time or the occurrence before that, we have to go back a couple years, 1995. Here is the date, May 31st, 1995, for those of you that want to go do that work. Remember, I used 9.5% versus your typical 10% out here. That was 9.98%. So was it a sign of, hey, there's something wrong here? And the spot volatility index being up big like that is telling us that there are troubles ahead. Nothing could be further from the truth. It just doesn't play out that way when we go back and take a look at the charts. If you want the other dates out here, you've got March 31st of 94, March 14th of 94, March 8th of 93, March 20th of 92, December 31st of 91, December 30th of 91, July 8th of 1990, and April 12th of 1990. Those are, in essence, the 10 occurrences out there. So for those of you thinking, aha, I knew it, that spot volatility index is telling us that this is just a bear trap out here, a bull trap, I should say, in the market. Just simply is not borne out. Now, you only have 11 or 12 occurrences, so not the greatest of sample sizes, but we have to deal with what we have out there. So that anomaly in the past has not meant anything other than the market has just continued moving higher. Now, we've got some questions that have come in, so let's go to those out here. Phil says, oh, I see two emails. One is a correction. I've got ARGX. Okay, so ARGX. Let's get over to our three time frame charts out here, ARGX. Then we'll come back and actually read the question. So you've got ARGX from 2739. Hey, we're clapping for you. This thing is at 32.32. You're having a huge day. This is Argenix. Have sold a quarter of the holding and wonder how you would set targets on a stock like this. Well, this is probably difficult to do because it's a IPO of sorts, been around since May of 2017. There just simply isn't really enough data out here to be able to provide me with anything. This thing is so thinly traded. Meaning you just go back into October, just go back a month, there were only 10,000 shares sold on, October 31st was 19,000 shares. A couple days earlier was 10,000 shares. There's basically no liquidity, so to speak, inside this. This thing is up 260,000 shares yesterday. Today, 134,000 shares. You've got wide price spread. So I don't know what Argenix is. You must because you got into it. But there is no reliable technical pattern that I can see out here. Yeah, I can draw an A to B equals CD pattern, but me, and I consider myself to be a master of these patterns, I wouldn't rely on this as the price projections for this equity. No way. And with it being so thinly traded out here, how long did it actually take you to get filled? And I can't even draw an A to B equals CD. It won't even let me do it for whatever the reason is. So I don't know how to. I don't know how to help. I can say this for you. I can say that you have the widest ranging bar today other than the IPO. And markets do not typically end on wide ranging bars. So this thing continues higher. You've got nice profits in it. Just adjust your stop if you can, whatever that might mean to you. I can share with you that right now the average daily true range, meaning over the last 10 days, is $1.36. If you're not thinking of staying in this for the long term and this is a trade for you, take $1.36 times 1.618, figure out what that dollar value is, and subtract it from the close today and put one of your stops there for some of your position or the rest of your position or something like that. That's the only kind of logical thing that I have. But you've got a wide-ranging bar. This should continue higher and that is ticker symbol ARGX. And all we can do is applaud you and say, one heck of a nice trade or investment, however it is that you are looking at it. All right, so let's go take a look at what should we take a look at? As far as the markets and where they're headed to, they're headed higher. Right, we have been consistent with saying that these markets are going to be priced higher in December towards Christmas, maybe the end, maybe even later than that. And you might say, what in the Sam heck are you talking about? Well, if we take a look at just logic out here, if we take, at least that's Steve logic, it may not be very good logic, but it is logic nonetheless. If we just look at the S&P 500 and we go back to the beginning of the bull run, there's no question we're still in that bull run, and this is a weekly chart. When we come back from this break, we'll identify when the S&P 500 has typically topped from a seasonal perspective. And why would it change this year? Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So really only once since the 2009 bottom have we seen the so-called Santa Claus rally, which basically begins in August 23rd, which is what it did this year out here. And the market continues higher. In 2010, or in 2009, the market, in essence, paused in January of 2010. In 2010, the pause came in February of 2011. In 2011, the pause didn't come until April of 2012. It's a weekly chart that we're looking at. In 2012, the pause didn't come until May of 2013. In 2013, it arrived in January 2014. In 2014, it arrived in January of 2015. And then this was the only bummer year. In 15, we didn't get that. In fact, we had a bottom, kind of the normal bottom, that formed in January of 2016. When I say normal, I'm referring to the 86-year history of what the Dow typically does. Now, this is the S&P 500 that we're looking at. 2016, that top came in February of 2017. So there's absolutely, positively no reason for the S&P 500 not to continue to do the same pattern. We're still in this bull market. If anything, it's just getting stronger out here. And so we should anticipate that the S&P 500 is going to be priced higher at the end of the month and probably into the early part of January to possibly February to maybe even April or even May out there, because that is what we have seen in the past. But we're not looking at a market right now that is going to top today, tomorrow, the next day. And yes, all pullbacks should be bought out here. So the Santa Claus rally, the move higher, it's in full swing. It's just simply what the data is showing us out here. Whether you like it or not, that's what the data is showing both you and I. If we take a look at a short-term basis, are we seeing any kinds of real signal of some kind of top out here? Well, I guess what I would do is maybe the best thing to do is just go look at some of the daily equity futures contracts and take a look at our TAS market profiles out here. Let's go see what they say to you and I. So here's the ES Mini, 30-minute, 60-minute, 240-minute, daily and weekly. And as you take a look at each of these charts here, you're going to see that everything inside the ES Mini is well above resistance. So there is no level of resistance that the ES Mini is dealing with. It can continue to move higher throughout the day. From a 30-minute perspective, what has it done out here? Well, you did have this little shooting star candle right as we came onto the air at 1 o'clock out here. That just said that the highest high of today is a short-term resistance level. It's not something you would want to sell, but a pause or a pull back to 2646, Stevie's red line, no big deal. That would just kind of be normal. But you get above today's high, you've cleared another short-term area of resistance inside of it. But looking at these profiles, hey, it's long and strong out here. If you look at the NQ on a 30-minute basis, it just formed a brand new 30-minute profile that, quite frankly, was underneath price. That actually is very bullish signal here for the NQ. You're above the top of the box on a 60-minute. You are not above the top of the box on a 240, but that's a bullish structured box and says 63.99 is the target. You're back inside, as we speak right now, the daily profile that formed here this morning. 63.56 is the bottom. 64.2950 is the top. The conclusion we draw here is when and if price gets above 63.99, you can expect 64.29 to be explored, tagged, perhaps even taken out. So the NQ, as bad as it looked yesterday, well, it's looking much healthier today. Must not have gotten one of those flu shots. It's not going to actually stop you from getting the flu. How'd you like that article this morning? Yeah, you go look it up yourself. The strain that they used is not the strain. And I'm no physician out here, so my apology to physicians or those that believe in the flu shots out here. The strain that they have for this year's flu shot is working about 10% of the time. Now, if you were going to follow a newsletter writer, would you invest a lot of money in that person, man or woman, if they were only right 10% of the time out here? So if you got a flu shot, hey, that's great. It's pretty good, I guess, for last year's flu. It just is stinko with regard to this year's flu. If we take a look at the Dow equity futures contract, It's just green shoots everywhere. It's above all profiles. There's nothing stopping this from continuing to move higher. The Russell 2000, we take a look at it. It's trading right now into a bit of resistance. The resistance here, the resistance level for you to be watching, at least at this stage of the game, is going to be 1550.60. That's the top of a 60-minute profile. That's the top of a 240-minute profile. And if price can clear those levels, then the Russell 2000 will just simply continue moving higher. Why has it stalled a little bit compared to the other indices today? Well, I would venture to say it stalled because of those sellers that are camped out in that 1550 type area. And we know that they're stalled out there because we can also see on a 30-minute basis, if we just update this chart here, that price was moving higher, doing less relative energy, a little shooting star as well, that form. So if price gets above the high of the day here, then all resistance is just simply gone by the wayside. This is not suggesting to you at all that the market is making a top. It just simply isn't. It just the data is, there's no data there to support it. The data was there, could be there inside the NQ with yesterday's washout to the downside, but I don't think so. There just simply was no additional follow through today. And the other signals that you and I looked at, which was the NASDAQ, I don't have those signals up on my screen right now, but just looking at market breadth from the TAS market profiles out there, they were signaling, hey, it's the price that's wrong because the market breadth was plenty. And speaking of market breadth, good or bad out here, let's go look at the market breadth. The market breadth is good. We are where buyers are in control. All advanced decline oscillator readings, are above the zero line. The Dow is at a fresh recent high out here, so that is positive. I think what it is that we're going to be watching for, let me see if I can find this chart out here. It'll just probably take a few minutes to run through all these different tools and charts that I've got, but let me see if I can find the NASDAQ in the New York Stock Exchange. Just give me 1 minute here. It should pop up. There we go. The advanced decline major, there's 150 page. Yeah, let's go with this page right here that's going to pop up on our screen. Here's what it is that I think you and I are watching for next. Now, we're just looking at the New York Stock Exchange. We're looking at its advanced decline oscillator reading. It is measured at 78.68 right now. And all we want to do is see it close above 80.33 today. That would then be an indication to you and I. And if it doesn't, it doesn't. No big deal. Where I think this is headed to, market breadth-wise, is to the plus 150 level. Remember, at the minus 150 level, November 15th, that is where subscribers and I went long the Dow, the S&P, the Russell, the NASDAQ, the XLP, consumer discretionary sector. And now, for a number of reasons, each of which I had shared with you, now what I'm looking for is the New York Stock Exchange, if it's going to form any kind of short-term top, won't happen until it gets to the plus 150 area. And we're only halfway there. Only halfway there. The run is going to continue. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. It's that time of year again. The TFNN Salvation Army Tiger Dollar Holiday Sale is back. Through this Sunday only, you can get a 25% bonus on any Tiger Dollar purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. This sale only comes around once a year and is one of the most rewarding promotions we have. Tiger Dollars are a great way to add extra savings to any TFNN product or service. Whether you're considering signing up for any newsletter or workshop in the future, or you're already a subscriber, Tiger Dollars offer an immediate savings on any TFNN newsletter, webinar, workshop, or Master Trader series. And they never expire and are fully transferable to friends and family. For all the details and to take part in this special promotion, visit the front page of TFNN.com before this sale ends Sunday, December 3rd. And happy holidays from TFNN.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Nick had asked me to repeat the NQ information that we took a look at. And Nick, so what I share with you here, you're looking for resistance or support. And if we look at the 30-minute time frame chart out here, what you're going to notice since yesterday's is you can see these market profiles continue to make higher level 30-minute profiles. We had one that came in just a few minutes ago at 1:30. So brand new profile, and price was above that level when it formed. That is a very bullish message. Once price cleared this profile right here at the 63.28 level, that was a bearish structured profile that was very bullish. So on a short-term basis, you've got a bullish reading. On the 60-minute time frame chart, you're above resistance, 63.55.70. That's a bullish message. On the 60-minute time frame for market breadth, I know you said things look weak out here. Things look very strong. Market breadth on a 60-minute term basis on the profile level at 4 a.m. this morning had a bullish crossover. That's a strong move. As we speak right now, 48 of the equities are trading above the top of their 60-minute box and 22 below the bottom. So short-term, NASDAQ 100, take a look at a 1-hour time frame. It's very strong out here. If I look at a 4-hour time frame chart, that too crossed positive, nice little bullish crossover. That took place at 8 o'clock on November 28th. That was one of the indications yesterday that, man, something was not right with regard to that push lower. If we look at the daily chart, which you'd asked for, that never got below the zero level, even with the big, huge push to the downside. That has been in a bullish, positive stance since September 27. Actually, I take that back. There was a one-day wonder where it dipped below zero, and then it came right back above it on October 26 out here. So really, market breadth, if you're going to use market breadth, as a indicator with regard to the NASDAQ 100 is very strong. So where price is headed to inside the NQ is 63.99, and if it gets above that, sit back to the highs, 64.29, just as if yesterday didn't happen. With regard to, you asked where my red line was on the daily chart out here, Give me a minute. I'll go ahead and pull that up for you as I switch to a different set of tables out here. Here is the NQ daily. With regard to the red line, 6406 is the number. That's where I suppose you could see the next resistance level, but I'd go with I don't think so. Just too many things with regard to the market tools and indicator that you and I look at just say, no, it's just not the case out here. If you look at the summation index, we're still mean and green out here in the NASDAQ composite. All that yesterday was, we talked about it, and then now we know, all that yesterday was a test of a breakout level inside the NASDAQ composite. Price came right down to the gap. That was the gap that was formed between November 20th and November 21st. Price came right then. A gap is simply a sign of strength. A gap to the upside. A gap to the downside is a sign of weakness. Those gap levels are used for support or resistance. At this stage here, it was established for support. So I'd say just be careful. Steve, have you shown your NQ red lines across different time frames yet? No, I haven't. If we take a look at the 30-minute chart out here, that's the one that I believe was the most important. We haven't seen that yet. That's because that price oscillator in the bottom here, JB, is up above zero, and I've been waiting for a test of price in the red line, currently at about 63.50. It hasn't happened yet. We will see over the course of the next several hours. I can't tell you how many. We'll see price and that red line catch up to each other, and a test of that and a bounce off of it is just another further bullish message. Price comes below it, 63.40 would become the level of support, and that's on the 30-minute time frame chart. On the 2-hour time frame chart out here, price is above that level, but the price oscillator is still below zero. It's got its work cut out for it here. You've had 4. Now this will be the 5th consecutive bar with the close above the bar 4 bars ago. So this may be on its way to making a TD 9 count out here on the 2-hour chart. On the 4-hour chart with regard to its red line out here, JB, prices right now dealing with that, taking that on. That's at 63.58 out here. So it's just not, for those of you that are out here thinking that, aha, yesterday was proof in the pudding that the market has topped and that the market is going to go down lower. It's just not the case. And whatever was going on inside that spot volatility index where somebody didn't get the memo, where it was up 10% here at about a quarter to 1, right now it's back to flat. It's back to nothing. And so with regard to the spot volatility index out here, this thing closes below 1050. Don't even entertain short-term short trades. Instead, spend all of your focus and all of your time trying to figure out where is it that you can jump on the long train out here, because the long train is going to be around for a while. It's going to be around for the rest of December. There's just no other indications out here. And yesterday was a perfect example of how this market here just simply fights off the bad news. Even Rocket Man can't do anything to touch the market out here. And so that's my take in the reading of the charts out here. It's not just because I'm long the market, and although that's a bias, and you can say, you're not really looking at the other signals. I look at everything. I think I have an assortment of tools that help us identify tops and bottoms out here that is second to none. And when those tools begin to confirm, look, if there is some type of top and it's of significance, which is not the case out here, wait at least for these advanced decline oscillator readings to get below zero. At least wait for the simplest of things to go ahead and confirm, and then wait to start, and then maybe even wait to see some lower highs and lower lows out there. So that's what I see in the market. I know there was a question to take a look at the yen. Might have been Danny in Atlanta or something. If we go take a look at the yen out here, the yen is starting to look a little bit iffy here. You can see how it's moved lower. You can see how price is trading below my red line, not below a profile level. So let's go take a look at yen futures out here. Let's take a look at and see where the back is truly up against the wall. We'll look at yen futures. Here we go. Here's the December contract. And on a daily basis specifically is what you and I are most interested in. Danny or anyone trading the yen futures out here, we're watching the price point of 0.8873. This is a bullish structured box. If price closes below that, then that says we're headed lower. You would say headed lower to where? That's what I would say. And the headed lower to where would come from our weekly time frame chart. And that would say probably 0.87581. And if that happens, what we're going to see is we should see gold continue to move lower, and we should see treasury bonds continue to move lower. So today was the day when both gold and yen could have just simply tested their respective red lines, bounced off of it, and that would have set up the next run higher. That has not happened, and so now we have to take a look at other areas of support to try to figure out what's going on. But if, in fact, that level of support on a daily basis gets broken through and we start to see a falling price oscillator below zero, it's bad news. It says you go back to the prior swing point, and if you bust through that, which you very well could, says that the yen would continue lower. Dow is up 302, S&P's up 22, NASDAQ 100 up 51 points. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's up 301 points. Rob writes in, says, hey, Steve. I say, hey, Rob. Thanks for looking at the VIX. Does this look like a good dip to buy here in the SMH? or perhaps it will pull back a bit more. So when we take a look at the SMHs, that's going to be the ETF that you would trade for the semiconductor index, or one of them that you could trade. You know, here's what we're looking at, and maybe Robbie, it's still a bit too early. The candle session, as an example of what we have today, this is nothing more than, it's an inside bar, but this is nothing more than just simply a pause button. So this is not telling us that a bottom has come in. We had price moving higher with less relative energy. You got the bearish reversal signal when this thing had gapped down. This being the semiconductor index on the trading session of November 27th. And this has had the follow through to the downside. Can our markets go up with the semiconductors coming down? The answer is absolutely, it can. And so then that says we start to look for support out here. And support on this daily chart for the semis is down around 1217. You're at 1276. So yes, this could move lower. If I just simply come back to the SMHs, you know, price here is below the daily boxes with conviction, albeit 17 million shares out here. You are at the point of control, the center of the box on the weekly. I'd rather you wait right now and take a look at maybe 95.62. I think what you really have to do with regard to the SMHs is, Robbie, is you've got to go take a look at, you don't have to, but I would suggest that you do it, highly suggested. Go look at the top 10 holdings inside there and do a study on each of those. Try to identify where they are at with regard to support and resistance, breakout levels, gaps to the upside, things like that. Just some simple things to figure out what those top 10 equities are doing in it. So, folks, it is terrific Thursday. You know what that means? That means we've got David White. Of course, he's always up on decks, our favorite polar bear. Tom O'Brien from 3 to 5. And then Andy Heck to take it on home from 5 to 6. So have a great day. We'll see you on fantastic, fabulous, fun day Friday. Thanks for being here. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.